All right, again, I apologize for the volume. I have not been able to figure out what is wrong with the microphone on this laptop, but we'll make do as best as possible. So I want to look at gold and the dollar again today. As I've noted before, this major resistance zone here, this lower pivot, and then this pivot right here, you can see the dollar went right through that on the first try. That's never going to happen naturally. The ECB, we're in a currency war right now. The ECB is trying to keep the euro suppressed and the dollar propped up. But what generally happens is eventually the interventions break, and I think that's probably what's happening here. This intermediate cycle is already way too long to be natural. Like I said, it was never going to naturally go through that resistance on the first try. It would have dropped into an intermediate decline and then made a second run at it. But it looks like the manipulation is trying to break today. And I noted this was a possibility that once the Fed actually did confirm that they were going to start to taper QE and try to raise rates, then the logical assumption would be that the dollar would go up. But the dollar's already been pricing that in, along with some currency interventions. And so there's no buyers left, and the ECB is not going to be able to keep the dollar propped up all by themselves. And so the intervention is breaking. Usually that just results in a much more violent move once the manipulation breaks. That looks like what's happening today. I would let me zoom in here a little bit. So this looks like the daily cycle low to me. The only problem with this scenario is that we didn't turn the 10-day moving average back up. So it's still possible that we're working down into the daily cycle low here. Maybe we'll bottom on this support and resistance zone. And then we get another bounce, one that lasts a little longer. This was only 3 days. Maybe we get something that lasts 5 to 8 to 10 days, and then we roll over and left translate the next daily cycle down into an intermediate cycle low. Either way, we've broken below this pivot and we've broken below this pivot, so the dollar is making lower lows. Now again, in the heavily manipulated currency markets, that doesn't mean as much as it would in any other asset. Lower lows is an indication of an intermediate decline, but there's so much manipulation in the currencies that these rules can be negated with a successful intervention. So we'll keep an eye on it, but as of right now, it looks like this is a daily cycle that is left translating, and if not, then we'll probably get a bottom here on this support and resistance, and then we'll get, like I said, maybe a bounce that lasts a little longer, 5 to 8, maybe 10 days, turns that 10-day moving average back up, and then we left translate and come down and make an intermediate low. There's also a possibility that this is the 3-year cycle top. So let me move out a little bit. Here's our 3-year cycle low. I think we're in a secular bear market, so my expectation is that the larger 3-year cycle will left translate. It's possible that that's what's happened right here, that once all the news was out that the Fed is going to taper and they're going to try and raise rates, then all the good news is already out, and then the market has nowhere to go but back down. And if it's also in the process of breaking the manipulation to force the currencies to do what they don't really want to do, then this could be even more aggressive. And if this is our 3-year cycle top, then we got a long ways to go, and 2.5 years to do it before we get our next 3-year cycle low, something like this. And the assumption would be if this is left translating, then the dollar is going to move below this pivot at some point during this 3-year cycle. And so this has connotations for gold. Let me go over to the gold chart. So, I made a case the other day that maybe this is some kind of a weird intermediate cycle low. It's going to be hard for the cartel to keep gold suppressed if the dollar is moving down into an intermediate degree decline, they're certainly going to try. You can see we had a big attack right here at this 1835. This is my first line in the sand. I've said before, if gold can get above 1835, that's where I start to become more bullish. And if it can get above this peak right here at about 1880, that would be a higher intermediate high. So we would break this trend of lower highs that have been unfolding for the last year and a half. And if gold can break above that, then I think we're done with the handle, and this will turn out to be a really short 8-year cycle low. The cartel is going to fight this the whole way. There are going to be lots of attacks still. They're still attacking the miners. That's why I don't particularly like miners right now. That seems to be the favorite area for the cartel to attack. They can short and naked short the miners, whereas it's against the law to trade more than 3,000 contracts in the futures market. They get away with it, and they pay some small fines. But over the last couple of years, it seems like more often than not, they try to attack the miners. And if they can take the miners down, then gold tends to eventually follow. So I'm not fond of mining stocks right here, not yet. So we're gonna watch this. It sure looks like the dollar has started an intermediate decline. It's trying to break that manipulation, and we'll see here if gold can break free from the cartel suppression. First line in the sand is this 1835. Second is this 1880, and then the one that would make me bullish and start calling to the moon would be right here at about 1920. Once that's broken, then there's nothing left to look for, and at that point, I think we're coming out of the handle of that massive cup and handle pattern, and we're in and that would be confirmation that we're in the advancing phase of the next 8-year cycle.